Welcome to From the Ground Up. This week, I have Alex Gold, who is a longtime friend and an entrepreneur and a startup advisor and a VC and all sorts of different things. Has extensive experience in Silicon Valley. Alex, good to see you here.
Always great to see you, John Boitnott. Always great to see you.
So, Alex, give us a rundown of your project experience, all the different companies that you worked with, the companies you started, all of that, just so that we know what's going on.
Totally. So, thank you for having me. Super appreciate it. So right now, I'm a venture capitalist and venture investor, mostly focused on financial technology businesses. My fund is called Harvest Venture Partners. So we invest in, early stage businesses, pre-seed, Series A level companies. We're extremely active. We're both in Canada and the United States. I'm both American and Canadian, so we kind of straddle a line between both sides of the border. This kind of played on my experience of angel investing for over a decade. So I've been investing for a long period of time in companies across many different verticals: entertainment, media, financial technology, healthcare, different types of applications there. Prior to this, I started a digital health business called Maya, which used connected devices, wearables like the Oura Ring that I'm wearing right now, or an Apple Watch, to see if people are sick before they're symptomatic. So we were like the middleware layer in the platform, connecting all these devices and then computing that data into real insights for doctors and other clinicians. Really innovative, interesting company. Prior to that, I was at BCG Digital Ventures, which is a corporate innovation incubation arm. And then prior to that, where I met you, of course, I started a digital marketing business, a marketplace of digital marketers called Traction. And I started my career actually going to law school. And I'm very grateful that I am not a lawyer. Love the education. I think you can apply it every day. But I think there's options out of law school. You be a lawyer or a real estate agent. I didn't become either. So I think that's a good thing.
You're a very creative guy. You managed to avoid those paths altogether. So you're also creative. You're now no longer in Silicon Valley. You're over in Miami with the cool kids now. Give us a brief, snapshot of Miami. Is it, or Florida in general? I know you're in different parts of Florida, but is it really where the cool kids are? What's the scene like there? Just give us a brief Miami.
It's coming up. I think that it's going to look very different than, I spent over a decade knowing you, others in Silicon Valley, in San Francisco, in the Bay Area. And I came here like many other people during COVID. And I can definitively say that something is developing and building here, but I think it's going to look very different than what we have in the Bay Area, or even what we have in New York or other large cities that are startup or entrepreneurial capital centers in the US. What Miami does have that's quite interesting is a plurality of capital. So whether that's family offices or private equity firms or large financial institutions, Miami is an international capital of capital, I like to say. And how that translates downward to an entrepreneurial ecosystem, we're still starting to see like the initial green shoots of that. I don't really have real insight on that yet, but I'm on the ground here meeting with founders every day, and I am impressed with the talent locally. I am impressed with the people here.
So as someone who runs a venture capital firm, you'd be prime position to give me an answer on this. A lot of the people who listen to From the Ground Up here, they're solo entrepreneurs. They want to know how they can entice the interests of the venture capitalists. So what are some key things that you look for the small time entrepreneur just trying to get some funding?
I'd say the most important thing that any early stage founder needs to understand when starting to raise money, because I was a founder twice, I've raised money, is understanding your audience. I think many founders go in and try to meet with venture capitalists, angel investors, seed stage funds, especially at the earliest stage. And they don't necessarily understand the math for the people that they're pitching or the interests of the people they're pitching. Because venture capitalists, even the smallest fund managers, they have investors as well called limited partners or LPs that have their own schedules, their own capital interests, their own deployment interests. And going in and just thinking that your pitch or your orientation is going to win them over, you have to think about this as sales. It's sales 101. It's really all about sales. That's all this is. And that is going to be critical to understanding effectively what the VC is actually looking for. So know your audience. The second is really not underestimating the value of momentum when you raise money. So, especially at the earliest stages, if you go in and you say, I'm going to raise $1, $2, $3 million, and you go to an investor and you say, I have no money committed, and I'm raising $3 million, let's say, they're going to be like, well, I'm going to wait. I'm going to wait till everyone else is in, because that de-risks the actual investment. So what we always tell founders to do is break things into tranches in terms of what you're thinking about investing, so that you can build momentum. Because these types of, especially at the earliest levels, earliest stage rounds, it's really all about momentum. I would never underestimate that and the power of that.
Well, when it comes to what you just described, tranches, building into tranches, what would be a brief, good example of how to structure that?
Well, as I said, let's say you're at a seed stage round for a business and you're thinking about raising, let's say, $3 million. You could raise first 500K, then raise, 1.5 million, and then you could raise, the last $1 million. And then you could do that at different levels. So every investor feels like you're hitting a certain tranche at a certain time. And you can then, effectively go and achieve metrics against those tranches. So you don't have to raise necessarily all of it at once. You can raise it over a period of 4, 5, 6 months. So that you're thinking about, okay, how do I effectively give every investor the assurance that this round effectively is going to be closed? And the great thing about notes or convertible notes and safes as fundraising instruments is that they allow you to do that. So you can have 2 or 3 different notes or safes in your business or in your company that allows you to raise what's called different valuation caps. That it gives you a lot of flexibility.
That sounds good. Okay, so you got, you and one of your startup co-founders back in the day, as you're describing these tranches and the convertible notes and all that, it reminds me of how you guys were able to raise money for one of your companies back, or for several companies back in the day. Give me a war story of the difficulty, the hardship, the overcoming the great obstacles story of raising money in Silicon Valley years ago.
Yeah, I don't know if it's really about overcoming great obstacles. We have a lot of those stories, but I have a really funny one. The first large presentation I did for my first company, I'd never really pitched before. And, raising money, as I like to say, is hard until it gets easy. Once it gets easy, it gets fun. So that could be if you're actually fortunate enough to get capital and be good at it. This market's a different story right now, I always like to say. But we had this big pitch to one of the most reputable angel investor groups in Silicon Valley, in Menlo Park. There's like 2, so you could take a guess which one. And I was really nervous. I was shaking. I was like sweating, clammy in the back corner. I was like pacing the room, and my co-founder just plied me with, let's just say, alcoholic beverages to really get me drunk. And that calmed my nerves, so much so that through the process, when I went on stage to pitch the company, I was really legally inebriated. And I was moving around. I was kind of dancing. I was extremely comfortable. Let's just put it that way. And somebody asked a question and say, Mr. Gould, this is you have the right answer, I said. So I was very expressive, and we ended up closing 65% of the investors in the room because they thought that our presentation was what they said was the most charismatic and most passionate they had ever had. Obviously, you know why.
Well, obviously, there was a foundation of logic and math and all the rest of the things that are needed.
Thanks, John. We don't pay you enough.
Yeah, right. Just trying to help you out there. Okay,
Thank you.
Let's take it in a more creative direction. You have a wide variety of interests that take up your time, but they are still entrepreneurial endeavors. Let's just say what it is. It's Burning Man. You've been to, how many Burning Mans have you been to?
7 now.
Okay. What I should say is, how is Mudpocalypse? How did all that go? How did you get through it? Why do you still recommend Burning Man as something that entrepreneurs and anyone should check out still?
I wouldn't recommend going to a desert Mudpocalypse with anyone other than the Burning Man community. The community was almost designed for resilience like this. And so I think it's something that in many ways the mainstream media got a bit wrong. I think they're kind of plying on what they were thinking what was happening and occurring in the space, but actually wasn't. So you'd want to be in this space with these people that are caring, compassionate, and most importantly, resilient. Burning Man says to people that you're going to an environment that is constantly trying to kill you. So I think we are prepared for that in every single way. I always insist that people go so that they can effectively experience something of their own making. There's always so much going on at Burning Man. It's something you can't plan. It's the alchemy of the unexpected. And for those who are planning their trips or vacations, you immediately will have ultimate FOMO, or fear of missing out, because you can't, do everything, right? So you kind of have to go with it. And by going with it, you discover something about yourself or about your place in the world that you like, or you may not like. And that leads to a moment of discovery. So I always say everyone's burn, as it's called, is very different. So I encourage everyone to try, if they can afford it, they can get there, to have that type of an experience. And it's really something special.
All right, great. Alex, thank you for that. Thank you for coming to From the Ground Up. Great to have you.